story. Fitch Ratings and the Asian Development Bank have separately trimmed their growth outlook for the Philippines as the country continues to struggle in containing the pandemic. Fitch now expects the GDP to grow by 6.3% this year. That's lower than its earlier estimate of 6.9%. For its part, ADB forecasts the economy to hit a full-year expansion of 4.5%, down from its initial forecast of 6.5% growth it gave last year. ADB Country Director Kelly Bird says their updated projection is at the lower end of economists' estimates, so there are upsides to this forecast. He says priority should be given to addressing the scaring effects of the pandemic on the private sector employment. ADB sees a stronger growth for the Philippines in 2022, pegging it at 5.5%. ADB says public spending on infrastructure, better progress in the vaccination drive will support the country's recovery this year and the next. Meanwhile, Fitch says the lower projection is due to the reimposition of stricter measures in Metro Manila and nearby provinces on the back of a surge in new COVID-19 infections. Fitch says South and Southeast Asian nations' economies, especially the Philippines and India, are struggling with the resurgence of the virus, and weak tourism prospects as well as slow vaccine rollout are posing risks to a recovery. The outlook given by both Fitch and ADB are lower than the government's target of 6.5% to 7.5%. Economic managers earlier said they will convene next month to revisit this target due to the effects of the lockdown. Now, the national government's budget deficit widened to over 190 billion pesos in March. That's as spending grew double digits and revenues slipped amid a stricter lockdown. Preliminary data from the Treasury Bureau showed the budget deficit in March was almost triple the 71.6 billion peso deficit a year ago. This was attributed to increased expenditures, which rose by 22% last month. Meanwhile, overall revenues declined by 17% from its year-ago levels, which had included dividend remittances from state-owned corporations as mandated by the Bayanihan to Heal as One Act. Meanwhile, government debt share to GDP rose to 42% in the first half of 2020 from only 36% in the same period in 2019. Data from the Finance Department showed the general government debt stood at about 8 trillion pesos as of June 2020. That is an increase of almost 17% from the end June 2019 figures. Similarly, the national government debt to GDP ratio rose to 48% as of end June 2020 from the previous year's 41.7%. Okay, guys, quick check on our local unit, the peso. That's, of course, with the ballooning deficit we had just reported there. You can see on my terminal here, our peso weakening just a touch to 48.436 to the greenback, of course. And this, of course, comes as we've been trading sideways since at least the middle of February here. And of course, we were not able to break below that 48 levels so far year to date. Now, let's take a quick check at our own market open, still at 6,300 levels here, yet a bit of strengthening seen up by 0.4%. However, if you do check my chart here and notice the three lines here, which are, of course, the moving day averages, particularly the yellow line here, not a lot of optimism when you look at the technical indicators in the short term, at least according to AP Securities' Rachel Cruz. The index may sink further. It remains trapped, and you can see that on the right part of the graph here, trapped below the 200-day moving average and struggling to hold above that. It's been under that for 8 straight days. Yesterday, the gauge could retreat to 6,000 levels while the infections remain elevated. Now, recall that we are currently the world's worst performing index year to date. Now, let's take a quick check at our leaders and laggards this morning. I'm just going to refresh the terminal for you so we can see which ones are bringing the bourse up this morning. Bloomberry up by 3.6%, followed by Aboitiz Power and AEV there. Now, of course, these are two companies which have just released their first quarter earnings. Let's take a quick peek at that. Aboitiz Equity, first of all, first quarter net income, 7.6 billion pesos. That is up 280% year on year. Their core income, even higher than that, for 7.8 billion pesos, up 243% year on year. Now, power was 58% of those total income contributions, followed by, of course, financial services. They do own a Union Bank that was close to 30% of the pie, after which food, infrastructure, and real estate. Now, recall that this stock had already risen by as much as 2.4% yesterday. That's as the board had renewed the share buyback program and their authority to buy more shares in Aboitiz Power and Union Bank. They've also approved the plan to issue as much as 10 billion pesos of retail bonds in the third quarter. Aboitiz Power, as I mentioned, also one of the best performers. You can see that at 22 pesos and 80 centavos. This one, meanwhile, net income reported is 6.2 billion pesos for the first quarter. And they did mention power demand was lower due to the movement restrictions, but the net income was boosted by more water inflows, higher availability of thermal facilities, and increased spot sales. The core net income was actually 197% higher than a year earlier. And finally, just a very quick check on PNB, as they are looking to list PNB Holdings in the stock exchange. So this holding company of the bank invests in, develops in real estate properties. Now, recall that they have tried to monetize several buildings, one in Pasay City, one in Makati's Ayala district, one in the corner of Buendia Avenue. This, according to CEO Vic Veloso. Listing the PNB Holdings company will allow the shareholders to dispose of their shareholdings at the most cost-efficient manner. Recall that they can actually get the dividends of these properties sales and receive it as stockholders of the new holdings firm. So PNB, they're trading at 28 pesos and 15 centavos, 5 centavos rather. That's a jump of 3 3/10%. One industry has been touted as the saving grace of the economy during this pandemic. Is it delivering? Here to discuss the performance of the IT-BPM sector, we have with us Rey Untal, President of IBPAP. Good morning, Sir Rey, and welcome to the broadcast.
Good morning, Danie, and thank you again for having us here today.
Sir Rey, despite all of the challenges, the IT-BPM sector had delivered in 2020 positively. So that was $26.7 billion in revenues, 1.4% compared to the previous year. Of course, we're all happy about this if you compare it to how the GDP performed. But how far was this from what you were expecting pre-pandemic level? And how long is it going to take to actually just be able to recover what you were hoping to achieve?
Before the pandemic struck, we were in fact looking at a 5 to 5.5% growth, and obviously that was very challenging for us to accomplish last year. But as we have reported recently, we've achieved close to 2% growth, and again, in the backdrop of how the global economies have contracted, our own GDP performance, I think it's great. Moving forward, we are cautiously optimistic that we will be able to meet, if not exceed, the recalibrated target, which is 5 to 5.5%. And there has been early indications before the surge, where many of our member companies and the industry players have already started to register growth first quarter this year.
Okay, sir, now we're 1 year into the lockdown, so to speak, or at least into the pandemic. Which drivers have sustained this continued growth? Which ones flourished, particularly in the Philippines setting? You did mention you have an increased 23,000 employees in 2020. Which sectors brought that in? Is that a net figure compared to the ones that we have lost as well due to unemployment? And how did the other harder hit sectors fare?
That's correct, Danny. The numbers that we have shown here is, in fact, the net growth. No, it already accounts for other companies which have shown growth for the past calendar year, as well as other companies also which had to take off, some employment. What we have observed as we zoomed in on the details is that really e-commerce, healthcare, retail, and telco, they were the ones who really picked up significantly. And I don't think it's a surprise to many that the travel, tourism, and hospitality enterprises were the ones that were really hardest hit. But if we look at this in its entirety, the real secret sauce, so to speak, no, for the Philippine IT-BPM success was our ability to quickly transform our operations and be able to execute work from the safety of our residences. This work from home model allowed us to quickly recover the productive numbers that we lost at the height of the ECQ last year. And this is a continuing model that we are employing now, such that, with the surge, we're able to deal with the crisis better. We've learned a lot more. And while there's a lot more heavy lifting in the horizon, I think the pivot that the industry has taken in terms of embracing digital transformation is really key to us being able to be in this spot right now.
So one of the most agile, actually, sectors here when it comes to the shift to work from home, sir. But does this current situation, the surge, have any impact on the confidence of offshore locators to stay in the Philippines, or are they looking at other countries? How big of an issue is the COVID numbers to whether we will lose our competitive edge?
Well, we have to recognize that COVID is a global pandemic. No? So many other supply locations are equally dealing with the problem. I guess for our location, the advantage is really the fact, as I have mentioned a while ago, that we have really transitioned our operations to be able to operate in this hybrid model now, with a good number of our employees doing delivery from the confines of their residences, and a few others, because of varying reasons, are able to deliver the work from the brick and mortar offices now. And our assessment is that this model is really here to stay and may flex, from a percent to another. But we have seen how we can, in fact, deliver quality and predictable work by this model, and I think it's here to stay.
Sir, let's talk about your views and outlook for 2021. We had just reported a couple of downgrades when it comes to the Philippine economy. But when you look at global growth, it's the recovery seems to be underway, at least for the time being. To what extent are we dependent, or will we be benefiting from this global growth story, our partnerships in U.S. firms, or Chinese firms even? And just to add to that, in previous crisis, it seems that the IT-BPM industry benefited pa from the economic crisis worldwide. Is this going to be happening again, or is this a totally different animal?
So if we start dissecting the details, no, and looking at the last quarter of 2020, that was when we actually started seeing growth, back in the picture. And in fact, many of the publicly listed big players here in the Philippines have registered growth in the high teens, for the last quarter of last year. Earlier this year, the confidence in terms of seeing growth for 2021 was even stronger. And in fact, we have run a survey where close to more than 100 companies, in fact, responded, accounting for probably 50% of the industry headcount wise. And 87% of those who responded said that they anticipate growth this year, anywhere between 5 to 15%.
Mm.
And the remaining, 10, 13% who said they will remain flat for the year. So the prognosis is quite bullish now. But again, the caveat that I put here is that this happened just before the surge.
Okay, so hopefully, if the surge gets contained, we might go back to that sort of business confidence that they were already feeling in the end of
Yes.
2020 and the first quarter. Thank you so much for that update, Rey Untal of the IBPAP.
Thank you again.
Checking in on the other headlines we're keeping our eyes on, the Treasury Bureau is set to raise 170 billion pesos from the domestic debt market in May. 100 billion pesos would be borrowed during the weekly offering of Treasury bills, while another 70 billion pesos would be raised via T-bonds offered every 2 weeks. The Bureau says they retain the same domestic borrowing plan from April in order to build liquidity amid the pandemic. Recall that the government raised 205 billion pesos from the local debt market this month. This is more than the programmed 170 billion pesos as it opened its tax facility to take advantage of low rates and strong demands. Finance Secretary Sonny Dominguez once again defended Executive Order 128 during Tuesday's Senate Committee of the Whole hearing. Dominguez said that while the government could stand to lose 14 billion pesos in revenue, this measure would allow consumers to save over 67 billion pesos. That's why he insists that this trade-off would be beneficial to the entire country. Dominguez added that after 12 months, the administration expects pork prices to drop and stabilize while production picks up. Once this happens, the finance secretary said that is the time they will ease off on the policy. And that's a first look into the business day. Today's Wednesday, April 28, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.